One of Kenya's top-tier banks, NCBA, says that it expects the dollar access problems, which have plagued East Africa's largest economy, to marginally ease from September, and that's as revenues from tea and horticulture exports rise. We'll get to that in a moment, but first, here's a run through their first half results. Now, net earnings rose by double digits, continuing a trend seen across the large top-tier banks in East Africa's largest economy. In the first half of the year, NCBA's loan book rose by a paltry 4.3% to $1.8 billion, whereas its total bond portfolio rose by 18% to stand at $1.69 billion. Now, net interest income shrunk by 3% compared to the same period in 2021, down to just $92.6 million. In comparison, interest income from its bonds portfolio rose by 26% year on year. Now, the bank reported a 21% fall in its gross non-performing loans. Given the volatility in the FX market, the bank reported a rise of over 120% in both its FX trading income as well as the size of its forwards, swaps and options portfolio. While CGTN's Ramah Nyang had a conversation with the Group Managing Director at NCBA, John Gachora, some hours ago, and he started their conversation by focusing on the bank's efforts to get risk-based pricing models approved.
Where are you on talks with the central bank with regards to questions around pricing models? Because I know that has been an ongoing conversation. We covered it the last time we had this conversation. Where are we now? Are you much closer to approval? Have you gotten approval?
We are much closer to approval. I would not say that we have gotten approval yet, but we have agreed on most of the parameters. I do believe that this is just a matter of time before we get approval.
Looking forward, I know you've said that you have this pipeline of deals coming through, but what explains what happened here with this decline in net interest income?
So a number of things. One is that we have repriced quite a bit of our book to accommodate customers during this difficult period. And I can assure you that there are a lot of customers who have asked us to review their pricing. And part of that reduction that you see is purely because of pricing concessions that we've given to our customers to support their businesses during this period. I think, as I mentioned, the growth of the business, the growth of the book has started to come through. If I go by what has been approved, and indeed, the last couple of months, what we have seen. So I expect that that reduction will be replaced by growth in the book, especially in a corporate book. So I expect that what you see towards the end of the year, that -3% will be a positive. As to how much, I cannot say yet.
But also, yes, when you talk about, the concessions that you've made, because I know during the pandemic, around 2020, 2021, the entire conversation at that point in time was talking about how, we've deferred some payments, we've stretched out the maturities of some loans. And in some instances, there was a little bit of repricing. But if I hear you correctly, are we seeing that trend extend into 2022 as well? Are clients still struggling?
What we are seeing is a move towards, I would say, towards the corporate customers now struggling. And when I say struggling, it's not because their business is struggling. It's because of the intermittent costs that we have seen because of inflation, which is a global problem. So cost of inputs has gone up significantly. If you look at cost of dollars, of course, has gone up significantly. And therefore, because of those other expenses that they did not plan for that have come through, a number of them have been asking for pricing concessions. So we've seen that pressure. So that is from larger corporates. I think what we saw before during COVID was really for the smaller corporates who could not withstand the change in economic environment due to COVID. So on the lower side, we are not seeing that much pressure. What we are seeing, as I said, is on the larger corporates.
All right, then. And one last question for you on that particular topic. We know in the larger macro environment, Kenya's government owes suppliers roughly 500 billion shillings. That's, roughly around $4.8 billion in debt by the end of June. In that sort of macroeconomic environment, right, where the biggest actor in the economy is not paying its bills on time, how does that affect your loan book?
So I think you may have seen the news saying that we expect to see some struggles as far as banks that are exposed to government suppliers concerned. A number of things. One, we don't have a lot of suppliers that are exposed to government, first of all. That's a good thing. But we are working very carefully to understand them, to see how we can accommodate them during this period. We view it as a temporary position. It's transition when, the new government needs to reconstitute itself before they start paying these suppliers.
All right, then. Moving forward, one of the things that did stand out for me, at least looking at your books, your forward swaps and options position, that has gone up by significant margin. 5 billion that we're talking about last year, now it's essentially gone up to 11.5 billion. What exactly is happening there? Are we seeing more and more clients, given the exchange rate volatility we're seeing more clients coming to you and saying, look, can we lock in a position on KS availability at a specific price?
Yes, so what you see is, first of all, our FX revenues are significantly up year over year. That's because we have been the biggest provider of foreign currency, specifically dollars, to this market. And in so doing, the other things we've done is come up with, what I would call structures and products that our customers that need dollars can use. And one of them is those forwards that you saw there, where customers are buying dollars today to repay later. And that goes into the fact that we're able to give them dollars to do their transactions today as they wait to get the dollars to repay. So that's what you see in a lot of that. And in so doing, they would sometimes have to deposit shillings. And that becomes a forward contract that we have with them. So that's what you see. It's really just because the need for dollars, we've been able to meet need for dollars from our customers in an environment where, as you know, there had been short supply of dollars given the demand. And because of that, we've had to come up with new instruments to support our customers.
All right, then. Is this demand likely to persist into the second half of the year? Are you seeing that supply-demand imbalance, especially with regard to dollar demand in the market? Is that clearing up, or is it still the same?
Well, from what we have seen, we had the highest demand in terms of our performance somewhere around June. I think we are seeing that starting to taper off. And this tapering off, one, because of obviously the temporary slowdown in activity right before election and right after election, so that we see already. But also where we're going, as we have said before, the supply of dollars tends to increase around September because of larger tea sales as well as horticulture sales. And so we expect that this strong demand will start to abate towards the rest of the year.